3 years, 6 months, and one single word buried in a court ruling ended up deciding the fate of a cryptocurrency held by millions of people? You're watching Coin Crusader, and what happened inside that courtroom battle still shapes every major XRP decision being made today. Most people remember the headlines. Fewer people understand what actually happened behind them. And almost nobody talks about the one detail that made this case different from every other crypto lawsuit in history. It started in December 2020, when the Securities and Exchange Commission filed a lawsuit against Ripple Labs and 2 of its executives. The claim was direct. The SEC argued that XRP itself was an unregistered security and that Ripple had been raising money illegally for nearly a decade. Within hours, the damage was already spreading. Major exchanges began delisting XRP. Trading pairs disappeared overnight. Retail investors watched the price collapse by more than half in a matter of weeks, and for a while, it looked like XRP might not survive the fight at all. But here's where things start getting interesting. Ripple didn't settle. Most companies facing the SEC choose to pay a fine and move on quietly. Ripple chose to fight, and that decision alone changed the direction of crypto regulation for years to come. The legal argument came down to something surprisingly simple on paper, but incredibly complex in practice. Was XRP a security, like a stock or a bond? Or was it simply a currency, a tool for moving value, similar to Bitcoin or even the US dollar itself? That question mattered far beyond Ripple. If XRP was ruled a security, it would set a precedent that could apply to almost every token in the crypto market. Suddenly, this wasn't just Ripple's problem, it was an industry-wide test case, and everyone in crypto knew it. For over 2 years, the case moved through discovery, motions, and internal SEC communications that became public through legal filings. Some of those documents revealed internal disagreement at the SEC itself, with certain officials questioning whether XRP fit the legal definition the agency was using. Then, in July 2023, Judge Analisa Torres delivered a ruling that nobody fully expected. She split XRP into 2 categories. Sales made directly to institutional investors were ruled to be securities transactions. But XRP sold on public exchanges to everyday buyers who never had a direct relationship with Ripple did not meet that same legal standard. That distinction became the single most important line in the entire case. It meant XRP itself was not automatically a security. It depended entirely on how it was sold, not what it fundamentally was. And that raised an entirely different question for the rest of the crypto market. If the method of sale determines whether a token is a security, then thousands of other tokens could face the exact same scrutiny, one transaction type at a time. This wasn't just a win or a loss. It was a new legal framework nobody had fully mapped out yet. The market reaction was immediate. XRP jumped by double digits within hours of the ruling. Several major exchanges relisted the token almost overnight. And for the first time in years, XRP holders had something concrete instead of speculation. But that's only one part of the story. The SEC didn't simply walk away. The agency continued to pursue penalties related to the institutional sales portion of the ruling. And Ripple pushed back on those numbers as well, leading to another stretch of legal back and forth that stretched into 2024. Eventually, a final judgment brought clarity. Ripple was ordered to pay a financial penalty tied specifically to those institutional sales, a fraction of what the SEC had originally sought. It wasn't a total victory, it wasn't a total defeat either. It was something more complicated, and more useful than either side probably expected. To understand why this matters today, you have to look past the courtroom and into how the rest of the industry responded. Other crypto companies began restructuring how they sold tokens, aiming to avoid the same institutional sale problem that cost Ripple financially. Regulators outside the SEC took notice too. Lawmakers working on crypto legislation began referencing the Ripple case directly, using it as a real-world example of why clearer rules were needed in the first place, rather than case-by-case lawsuits. This is the part most people are missing. The Ripple case didn't just decide XRP's legal status. It became a reference point that shaped how regulators, lawmakers, and exchanges think about digital assets in general. Almost every major crypto policy conversation since 2023 has mentioned this ruling at some point. For XRP holders specifically, the practical impact has been significant. Relistings restored liquidity. Institutional interest slowly returned. Financial products tied to XRP, something that seemed unthinkable during the darkest months of the lawsuit, became realistic conversations instead of long shots. At the same time, this case revealed something uncomfortable about crypto regulation as a whole. A years-long lawsuit shouldn't be the only way an asset gets legal clarity. That gap is exactly what current legislative efforts, like the ongoing push for clearer market structure rules, are trying to address. Which brings up the bigger question investors should actually be watching. Regulatory clarity earned through a courtroom is different from regulatory clarity written into law. One depends on legal precedent holding up. The other depends on Congress actually finishing what it started. That difference matters more than it seems. Precedents can be challenged, narrowed, or reinterpreted in future cases. Legislation, once passed, creates a much steadier foundation. And that's the outcome many in the XRP community are still waiting to see fully realized. So the lawsuit technically ended. But the underlying question it raised, how digital assets should be classified and regulated in the United States, is still being worked out today, just through a different process and a different set of lawmakers. The real story may not be what happened inside that courtroom years ago. The real story is whether the framework built from this case becomes permanent law, or whether the next legal challenge starts this entire fight over again from a different angle.